I think just about everyone was caught by surprise when they opened up their brokerage account and seen Tesla's stock up over 4% today. There's a couple different reasons for why this could be happening, but let's put a main highlight on what Elon Musk just said about licensing FSD technology to other legacy OEMs, because that could be having quite a big role to play in today's rally. Hallmark's Catalog writes on X, FSD licensing. Number 1, allow OEMs to integrate it into any car for free or at a cost. The car owner pays for the FSD license. Active safety and basics comes free. And number 3, leverage supercharger deals and offer the same pricing as Tesla cars for EVs that integrate FSD hardware and share data. Elon Musk responded to this and said Tesla would be happy to do such deals. Now, why in English could this be a reason Tesla stock is higher today? Well, I think in simplest terms, nobody's going to catch up to Tesla. There is no catching up to Tesla. Tesla will be the de facto of FSD technology. So this really just comes down to it's a matter of time before other legacy OEMs license Tesla's FSD software. And this inevitably will grow to be a massive business for Tesla. Depending on how long your time horizon is, well, you will be rewarded for this. If you have a 12-month time horizon, well, this information really means nothing to you. If you have a 5 or 10-year time horizon, yeah, I think with a very high degree of likelihood, there will be many licensing deals for FSD that will drive profits through the roof for Tesla stock investors. But with that said, I think there's many other reasons why Tesla stock could be going higher today, and we'll talk about those here in this video. They're important and you need to know them, but you actually had some bad news today, which makes this 4+% rally in Tesla stock today that much more interesting. So here is the first bit of, I guess, negative news. Tesla has cut Model Y prices in Australia by up to 9.3% and introduced new color and wheel options. You can see the rear-wheel drive Model Y got its price cut by about 2.3%. The Model Y Long Range got their price cut by about 6.4%, and the Model Y Performance seen a 9.3% price cut. But I will point out, these Teslas in Australia are much more expensive than Teslas you'll find basically in any other demographic. So how much of an impact will this have to margins? I'm not convinced it will be meaningful. Keep in mind, Australia's not a large market for Tesla, but you could say this is bad news because of Tesla's cutting prices in Australia, that, by the way, just hit a new record high in March as the Tesla Model Y overtakes the Toyota Helix. You could say that Tesla may be prepared to cut prices in other more important markets. As you know, I'm not really convinced of that. I think Tesla's going to take the approach of focusing more on profitability, but this does show that Tesla is still willing to cut prices. But in my opinion, they're more calculated and precise rather than just broad market price reductions across their major markets. But I think we will get more clarity on that coming on April 23rd when we get Tesla's Q1 earnings. The second piece of bad news, and then the rest of the news is positive, Tesla has reduced the Megapack pricing by about $10,000 or a 0.5%. I find this very strange, interesting, I guess you could say, because apparently demand for stationary batteries is unprecedented. That is according to Elon Musk. Elon Musk says the production rate and fully considered cost are the challenges. Demand for stationary batteries is super high. I think Tesla might end up doing more total joules in stationary than mobile long term. This could actually be another reason why Tesla stock is performing so well today, kind of affirming the demand for stationary batteries, Tesla's Megapack systems. And it's kind of a crazy concept to even think about it. Elon is saying the battery business could end up being larger per energy deployments than the car business, which just shows how much growth could be ahead of Tesla for that specific sector. And that is, albeit considering Tesla only has about a 15% market share for stationary battery systems. If that could grow a little bit, that's impressive. But even at 15% market share, Tesla and Elon is saying, hey, you could see that business become, well, maybe not larger in total profits, but a very large segment of Tesla's business over time. This comes at a moment in which Wall Street doesn't pay a lot of attention to Tesla's energy generation and storage business. As we reported yesterday, Tesla's computer vision chief, Ethan Knight, has left Tesla and joined Elon Musk's XAI company. Elon Musk yesterday provided a little bit of context. It was either going to be OpenAI or XAI, and Ethan chose to stay with Tesla and just transfer to XAI instead of OpenAI. Elon Musk says today, Ethan is very talented, but vision chief would be overstating things. There are over 200 excellent engineers in the Tesla AI autonomy team. Tesla's pace of progress with autonomy is accelerating. Wow, Elon Musk just kind of dropped a bombshell on us right there. He says the talent war for AI is the craziest talent war I've ever seen. So Tesla's really making, or Elon is really making an effort to say, it doesn't really matter if one person leaves or this person leaves. There's 200 talented engineers at Tesla working on AI. This comes in a time where AI in the markets is very valuable. AI stocks in particular have been the best performers in 2024, and nobody's paid attention to Tesla, even though Tesla, pound for pound, likely has more engineers than a lot of these companies working on direct AI projects. Really at a time where Tesla's AI is accelerating, and we see this actually happening with the improvements in FSD, I think the markets are today at least saying, hey, maybe we did just write Tesla off too soon in the AI division as well as the energy division, and maybe even deliveries are starting to trough. That could be a part of today as well. When investing your money, you're always paying attention to what is going to happen. Who cares about what happened yesterday, the quarter before, or a year ago? Nobody cares about that. It's all about what's coming next. So when you get an environment where investors are like, hey, you know, Q1 had to be the trough. Things are going to get better in 2024 than what you've seen in Q1. That's where you're at the trough, and you start to curl up again. It just makes it seem like the next coming quarters are going to be better than the last, and that can have a very positive effect on a stock. And here's some really good news. Tesla has reportedly begun production of right-hand drive cars at Giga Berlin for export to India later this year. And this is according to Reuters. And they don't tend to be big fans of Tesla, but basically what this means is if there's a lack of demand in certain markets, maybe that starts to get filled by India. Maybe later in this year, deliveries could be better than expected. So I think all of these reasons, all of this good news is why Tesla stock is outperforming 4% today and just really having an overall good day. Now, I would say Tesla stock is very much discounted still relative to the good news that we have seen recently, the improvement of FSD, and all of the other good news that I've shared here on this channel in recent weeks. You're still getting a fantastic price for Tesla stock right now. You could also maybe make the argument that someone knows something out there. Big money tends to have more connections, more information than you and I do. And if we are going to get a good earnings, let's say, if Tesla is going to focus more on profitability, or who knows what the reason or good news could be, maybe that could be a cause of Tesla stock's outperformance today. Something to keep in mind over the next coming weeks. Ford said Thursday it had delayed the planned launch of 3-row EVs in Canada and its next generation electric pickup truck in Tennessee as the slowdown in EV demand globally forces automakers to revise production plans. I think Ford, GM, and other legacy autos are just trying to make this an EV problem because their largest components of their business are obviously internal combustion engines. They're trying to say, hey, you know, EVs are the weakness. It's not other areas of autos. And I'm just here to say that I think it's more of a financing problem. I think it's just too expensive to get a new vehicle right now. Polestar had this to say about Tesla yesterday, quote, "They are a mass market production player. We are a premium luxury brand with volume targets that are in line with that. So whereas Tesla is making millions of cars, we've never said we would do millions of cars. We're talking as a brand 150,000 global sales as a target for next year, for an example." Jim Chanos took to X yesterday to really point out Tesla's energy storage deployment was only up 4% year over year. In the meantime, Jim Chanos, known to be a legendary short seller, he closed his fund recently because his pessimistic positions, well, they did not turn into profits. His firm managed less than $200 million in 2023, down from $6 billion in 2008, and he lost a lot of money shorting Tesla, and he's also the one that took on Enron. Point is, just don't short Tesla. On Tesla's Europe and Middle East X account, they announced Quicksilver and Midnight Cherry are now available in the UK, Ireland, and Israel. Activist investor Nelson Peltz said this on CNBC today about Elon Musk. He said, quote, "Can I tell you something? Elon is a friend of mine. I think the world of him. This guy has no ego. That may be hard for you to believe, but having spent the amount of time I have with Elon, he's willing to listen to anybody. His ideas are beyond anything I've ever seen in my whole life. He's a brilliant guy who understands so many things about the world." Global inventory numbers for the Model Y going up sharply, now at almost 10,000 globally. Model X, Model S, and Model 3 inventories are spiking. Model X inventories at about 2,600. Model 3 inventories at about 2,000, and Model S inventories at about 1,300. Google Trends data continues to be strong for the Tesla lineup. I would say advertising is having a positive effect to this right now, but mainly the Cybertruck. And I think you're starting to see the early effects of the halo effect. The longer term halo effect is going to be huge for Tesla's entire lineup, including the Cybertruck. But recently the Cybertruck has went from 38 to 41, now being the most searched Tesla model out of all of them. The Model 3 going from 37 to 38, the Model Y from 37 to 35, and the Tesla Model S going from 13 to 14, and the Model X going from 11 back down to 10. So overall, very strong search trend activity for the Tesla lineup on Google. Google Trends data also, as I've said before, shows full self-driving Google searches at by far all-time highs, like not even close to anything we've ever seen before. That really doesn't come to me as a huge surprise. I think the question really will be, what kind of addition to subscriptions are we going to see? Are we going to see hundreds of thousands of people sign up for FSD subscriptions? Are you going to see people outright buying FSD? How is the conversion ratio going to change following this free 30-day trial for all Teslas of FSD in North America? Tesla is also the #1 trending stock currently on StockTwits, with sentiment that is bullish today at 68. Yesterday, you were bearish at 35, and that's just how quick retail investor sentiment can change on a day-by-day basis. Message volume today is at 66. That is considered high. Yesterday, you were at 60, which was also considered high, and the participation ratio today is at 55, pretty much where it has been recently. So more people are bullish today, more accounts are talking about Tesla, and more messages are being said on the Tesla forum here on StockTwits. The percent of stocks above their 50-day moving average today is up 4%, now sitting at about 59% of stocks overall. This is a solid uptrend from the lows that you've seen at about 44% of stocks above their 50-day moving average back here in mid-February. So things are looking better than then, but still just not the broadest market rally that you've seen before. Your latest AI investor sentiment survey shows that still Lots of people are bullish. 47.3% of investors are bullish. 30.5% are neutral, so a slight downtick in bullish investors, uptick in neutral investors. Bearish investors are staying the same. Like the core group of investors that are bears, they are still there, with 22.2% of investors currently being bearish. You are, at the time of recording this video, seeing quite a sell-off in the NASDAQ, and here's why. There was 3 specific comments that came out at about 2 p.m. today that caused this sell-off to start, and it really comes down to mainly Fed Kashgari. He says, it's possible the Fed won't cut this year if inflation stalls. And yeah, it's getting even worse at the time of recording this video. Fed Kashgari also says it's a question of why cut rates if the economy remains strong. And another comment from another Fed official, Fed Mester, she says, my long-term neutral estimate was raised to 3% from 2.5% in last month's summary of economic projections. And then Fed Goolsbee came out today at 2:04 p.m. All 3 of these Fed speakers are just boom, 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 pounding the bulls. Fed Goolsbee says, in March, I jotted down 2 rate cuts this year, but if inflation continues to move sideways, makes me wonder if we should cut rates at all this year. U.S. Secretary of State Anthony Blinken also says U.S. policy will change if Israel doesn't change course. So I think all of these things are likely just coming at a really bad time, kind of all at once for the markets, causing that sharp sell-off. At one point today, the NASDAQ was up over 1%, and you're now down almost a half of 1% with a pretty dang aggressive, just straight down sell-off. What makes this even more troubling is you're actually seeing 10-year treasury yields that are falling on this market drop. TLT is rising. That means yields are falling. Now, TLT being bought like this is usually a rush to safety, especially if what these Fed officials are saying really, in theory, should just keep TLT falling. The opposite's happening. Look back to the Rona right here. You initially seen that rush to safety. People are like, oh crap, whatever happens, I want 10-year treasuries, okay? I want 10-year treasuries, because if crap hits the fan and the fan starts spinning and spraying dookie everywhere, you're better off in 10-year treasuries than stocks and commodities and anything else, essentially. So when you see a sharp drop like this and you see TLT, aka the bonds, getting bought by investors, typically not a great sign. Gold as well. If you look at gold on the 1-minute candlestick chart, same thing here. You really started to get more buyers of gold as the markets have started to decline. Also, this can be seen as a rush to safety, but we'll talk about this a little bit more in the next video, because we also do have very big economic data coming out tomorrow that will cause a big move for the markets. Throughout all of this sell-off, this sharp reversal in the markets, Tesla stock is still up about 3% at the time of recording this video. Tesla is remaining strong today. Option activity from hedge funds and institutions today in Tesla stocks, quite negative. You have seen 655 different trades totaling $202.5 million with a positive order value of 37%. If we take a look at the shorts, not doing too much today. The cost to borrow fees are at about 9%. That would suggest some shorting activity taking place, but you're not seeing the short interest jumping just yet. Short interest still at 3.71% with about $17.3 billion currently in short positions. Tesla stock on a technical basis, before the markets really started to fall, was looking really good. You were at the high end of this kind of intermediate trend line. You hit that as a little bit of resistance. I think mainly it was just the markets coming down and this effect, this algorithmic effect on Tesla as well. Now you're sitting still at the lower end of this prior bullish channel's support level, and it looks like you're not above that now. You were, now you're not. So judging off of this, I think we'll have to see what happens towards the end of the day today and what happens tomorrow with the jobs report that will be coming out. In the next video, I'll go over my expectations, how that could affect the markets, all of that. But right now, Tesla's stock looks pretty dang good on the charts. Again, if you do get downside here, if a correction is going to start, then you're going to fall back to this trend line, which is going to be in the high 150s. Although it seems like the sentiment around Tesla really started to shift today. And for all the reasons we talked about, likely it's been long overdue. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. If you guys want to come trade with us as well, live in real time, every time I make trades, I send out alerts. Check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.